I'm very excited to welcome back Andy Schectman, the CEO of Miles Franklin, to provide commentary on some of the most recent headlines that are moving markets and impacting investors. Welcome back, Andy.
Good to be here. Thanks for having me. Appreciate it.
Absolutely. Thank you so much. First big headline that I want to walk through is, Biden, Putin square off as tension grows on the Ukraine border. What do you think of that?
I think it's disingenuous of us to tell Putin where he can station or place his 175,000 troops within the Russian Federation. They haven't crossed over into or have made any aggressions yet. They're on their side of the border. And I think that if we were to have felt by any stretch that we were being threatened by a neighbor to the north or to the south, that we would do the same thing. I think that there is a high probability that you will see some sort of an event, whether it be now or right into 2022. I think that we have shown weakness. I think by the way that we pulled out of Afghanistan, by the fact that Russia is now protecting or has embarked upon a joint military cooperation agreement, not only with Saudi Arabia, which gives the US dollar its dollar hegemony as the petrodollar reserve currency, but also Nigeria. They just announced the same thing with India. They have hypersonic ICBMs loaded into their nuclear submarines. I think that this is a powder keg waiting to happen. And at the same time, you have China knocking on the door in the South China Sea, Taiwan, and what happens there? I think this is real. And if I had to guess, you will see some sort of an event with Russia probably moving in. And I don't think there's a lot the U.S. can do about it. I hope that we don't think that we are prepared, or I just can't imagine going to war with a country like Russia and or with China. And I think, quite frankly, I think it's their business. It's not ours. We should get the hell out of protecting the rest of the world. And if Russia feels threatened by one of their neighbors, well, then that's their business and it's not ours. And I think it's going to happen, to be honest with you.
Yeah, that's why the geopolitical situation is so interesting, because the last, few countries to try to mess with the US dollar were Libya, Iran, and what was it, Syria. We know what happened to all of them, right? Iraq too.
Well, yeah.
Tragedy. So what if Russia and China start to pull the same thing? They're a lot bigger than those countries.
Well, you could argue in some respects they already have. And when you see Russia signing an agreement with Saudi Arabia, that is, since 1974, what has made the dollar the world reserve currency. There's no coincidence that they made this announcement the day after we left Afghanistan. There's no coincidence that they chose both Nigeria and Saudi Arabia, the two biggest OPEC producing countries in the world. There's no coincidence that the day after they announced the presence of hypersonic ICBMs, that was their way of saying, don't even think about it. I think that in many respects, you can say what you want about President Trump. He wasn't respected by a large segment of the populace in the United States, but I do believe he was respected by people like Vladimir Putin. And what's his name? What's his name in China? I believe they were respected. He was respected by the superpowers in the world. And I don't think we have that respect any longer. I think that the way that we are tiptoeing around this is going to lead to a problem. And our military is already spread too thin. We don't have the money to continue to fight these battles. I don't think we have the public will to fight these battles. I really believe that we will wake up one morning to find Saudi Arabia OPEC announcing oil to be offered in other currencies. And when that happens, if you think inflation is bad now, just wait when you see a tidal wave of dollars come crashing on shore. I think that China and Russia are going to be more relevant to the discussion over the next year or two than people think possible. When you talk about Nigeria being protected by Russia as well, don't forget, China has embarked upon the largest infrastructure project in human history, connecting Asia and Africa. So by messing with Nigeria, if indeed that's what we wanted to do, we would, in essence, be declaring war on China and Russia in trying to mess with Saudi Arabia or Russia, in this case, for its own interests. I think we are opening up a hornet's nest that we are not prepared to deal with. I think these are scary times. So whether we look at these types of problems or the problems here at home, the way the Federal Reserve is dealing with the problems related to inflation and the exacerbation of it, I think that there are some serious issues ahead coming on scene. And I think people need to really start to wake up to this. Dollar's in trouble. There's no question about it. The dollar is in big trouble. And quite frankly, I think this is just the beginning. Look, you take a look at the biggest money in the world. The insiders are unloading their stocks. The CEO of Microsoft just sold 50% of his holdings. 50%. Elon Musk just sold an astronomical $10 billion worth of stock. The biggest money in the world not only has been divesting of dollars, but you can see they're also divesting of stocks because I think that we have yet to really see the problem. There's still this belief that everything will be okay, whether it be here at home or geopolitically. And I think we're right kind of on the razor's edge of some big upheaval. So certainly what's going on in Russia, people ought to pay very close attention to. And, when you amass 175,000 troops at the border and basically say to President Biden, either you deal with this or we will, that's real. And I think people need to wake up to the fact that the markets, I don't believe, have priced this in yet.
Absolutely. And thinking about, the problems at home, like you mentioned, you do have infighting within the Democrats over this Build Back Better plan. Manchin saying the unknown of inflation is a bigger problem than Biden's spending bill. Do you have any thoughts on that kind of discussion and fight going on in Washington?
Yeah, I think obviously the biggest threat is that the Fed knows the inflation genie's already been let out of the bottle. And they have choices. Their choices are to address inflation by raising rates, which will kneecap the economy and crush the stock market, or perhaps a stagnating economy. So when you deal, and quite frankly, I think that that's a bigger concern than Russia or China, to be honest with you, because I think, look, they're destroying the dollar in favor of the stock markets. And, they want us to believe that all is okay because the stock markets are higher since 2008, since they started doing quantitative easing, because they want us to believe that a stock market is the measure of economic health, but it really isn't. And the stock market is not the measurement of economic health. Look, here's what it is. If the dollar is devalued too much, whether by endless printing or by relentless inflation pressures at home, all of those overseas dollars will come flooding back to the US. And I think that's when you see a massive injection of inflation when you need it least. And I think we're very close to that point. Without the Fed support, the stock markets die. And so, look, I guess you could say it this way. When you produce fiat money, that's not the same thing as real production within the economy. So if you create trillions of dollars for public works programs, this Build Back Better thing, it will create more jobs, but it's also going to inflate prices because they're creating all of this fake money to do all of this stuff. It's going to create jobs, but it will increase inflation. And if you don't raise wages to keep up with the cost of the inflation, you will have what's called stagflation. And I've been saying this for a long time. It leads to hyperstagflation, where you have massive increase in the cost of living with little or no economic growth. And so that's the problem, is that, you're already dealing with businesses that are taxed, and I mean not just taxed by the government, but by taxed, I mean they're hanging on, a lot of them by a thread. 130 or 40,000 small businesses gone forever. The costs are getting too high, and now if we don't raise wages, which only hurts the businesses more, then you have stagflation, where people are employed, but the cost of living is so high that you end up really going nowhere. In fact, there's a Gallup poll just came out and said that, I think it was 40,000 or less, people earning 40,000 or less, that 70 or 80% of them are already experiencing hardship. 100,000 or less, it's down a little bit, 30 or 40% experiencing hardship. But you have prices that will continue to rise. And as we've talked about before, the core things that are rising so fast, like food, like energy, like rent, those things aren't included in the measurement of the CPI. I think that inflation is real, and this Build Back Better deal, while on the surface seems like, that's good. Let's build this country back better. Let's put people to work and work on the infrastructure. But what this will do is only exacerbate an already, I think, out of control inflation. And I think you ain't seen nothing yet, to be honest with you.
Yeah, and then just talking about even further kind of complicating factors to the inflation story is the destruction of the fossil fuel industry, right? And we know fossil fuels and oil are huge inputs into the economy, into everything, right? And so you have Saudi Aramco CEO warning of social unrest if fossil fuels are ditched too quickly. Leaders should invest in oil and gas to stave off this inflation.
I mean, I think you're going to see explosively higher oil. You've had 7 or 8 years of dramatic underinvestment in hydrocarbons, fueled by, I don't know, ignorance. And this will $100 plus oil, $5 plus gasoline. I don't know how it all plays out, because you're seeing a move away from fossil fuels and a move away from the combustion engine. But you got Biden coming out and asking OPEC to increase oil production, and at the same time, he doesn't go to our U.S. shale producers and say that. He doesn't build the infrastructure. Say what you want about the way President Trump spoke and the way that he acted sometimes in a manner that was not quite presidential, but his policies, I believe, put the United States in a better place. And to ignore our resources at home and go to OPEC and ask them to create more output, and they did. They added another 500,000 barrels a day or whatever, is just, again, emblematic of the place that we are in. And going back, just one last thing, to talk about what we were just talking about with inflation real quick. Rising oil, well, that's a symptom of inflation as well. But they talk about tapering, right? And if inflation becomes too rampant, the Federal Reserve may be compelled, or at least they'll do lip service and claim that they're compelled to raise interest rates. First of all, interest rates should be markedly higher, and they should be controlled by the market, not by some fat rich bankers who decide what the rates should be. But raising interest rates in this environment means several things. It means an immediate slowdown flow of overnight lending to the major banks. It means slowdown in loans to large and small businesses. It means crashing the credit options for consumers and overall consumer spending. And they tried this in 2018 or 19, and the market threw up. I think we can never raise rates. The market will raise rates. I don't think the Fed has any inclination of raising rates. And that's why I said, well, even talk of raising rates is enough to spook the market. But raising rates at this point will create a major problem too, Elliot, because you have stocks, bonds, and real estate at all-time highs that are inversely correlated to the rise in interest rates. And so This is why I think they have chosen to lip service, if you will. They're going to continue to inflate. They will not raise rates. They'll continue. That's, you got this Omicron strain that now we better not taper just yet because we need more stimulus and we're going to see more lockdowns and mandates and all of these things that will hurt the economy, but will allow them to continue the path that they're on of stimulus, of low interest rates, and not of tapering. In fact, I believe the mantra behind closed doors of the Fed is inflate or die. They have to inflate or default. And where it gets sticky is when the rest of the world realizes that they need some form of compensation for a dollar that is being rapidly and massively devalued. And I don't think that they will taper. I don't care what they say. I don't care their calls for it. Yeah, it makes sense. It's logical. But I don't think it's going to happen because logical until you start to dig in what the unintended consequences would be if they decide to do that. Elliot, I just can't see it happening.
Yeah, no chance. And so that's the beautiful setup here. So people think they will, so there's softness, potential buying opportunity. Once they lift off that taper and they say, no, it's not happening, that's just going to be a huge boost to everything, including, precious metals. And so my question for you is, in this environment, why should people consider physical precious metals?
Because 5,000 years worth of history have shown that gold and silver are wealth. And the more things change, the more they stay the same. I think that you don't buy gold and silver, Elliot, as an investment, you buy it as wealth. And I just believe we are at the end of the Keynesian-based experiment, an economic system based upon debt and spending and taxation rather than savings and investment and reinvestment. And I think we've lived for a long time above our means based upon the good graces of our foreign creditors. And I think those days are coming to an end. Let me just say that one more time. You buy gold and silver not to get wealthy. You buy it because it is wealth. You buy and hope you never need to use it. And if you do, you're damn glad you have it. And it's not just for an emergency. Now, obviously gold and silver react to big events, right? And you buy it hopeful that you never need to use it, not just for those big events, but also for an opportunity. As I mentioned, the crack up boom in Austrian economics speaks to the misallocation of capital and of resources. Look at all the prices that are ridiculous. As I mentioned, 19 years worth of inflows into the US stock market this year. That's misallocation. And that's because groups like hedge funds can borrow money at next to nothing, pummel it into the market, jack up the prices, make huge bonuses, pay back those loans at next to nothing, and create these distortions. But if you see tapering, if you see a seminal event, if you see something that kneecaps the markets, and that will happen if rates rise, you're sitting with a whole bunch of gold and silver dry powder that you can take advantage of opportunities too. So it's not just emergencies. And if you don't need it, there are very few things that you can leave for your children or your grandchildren or your nieces or your nephews or donate to a church or whatever, that has not only a good deal of sentimental value, which means something, at least does to me, and I'm sure to a lot of people out there, but also a hell of a lot of intrinsic value. And it has been wealth for 5,000 years. You buy gold and silver because it is wealth in a world that has gone mad. And it's not just financial, as I've talked about, all-time highs in 12 major cities, homicide rates. You look at what's going on in Los Angeles right now with police stations and fire stations not able to respond to emergencies because they are being mandated to close down. We are, you look at San Francisco, it's a mess. In fact, pardon my French, it's a shit show. You look at what's happening in New York City, all of these major cities, you wonder why 5,000 people a day are moving to Texas and to Florida, leaving the blue states. You look at the taxes that people are having to pay. In other words, what I'm getting at is that there was a rush there's not enough scientific evidence behind it, and they're using it as a rationale literally to destroy major cities. You look at these smash and grabs going on all around the country, where people are running in and ransacking stores that are now, terrified about the holiday season. What's going to happen? You exacerbate all of this. You didn't think it could happen here in this country, but obviously it can. And so it goes deeper than the cost of oil and what's going to happen with interest rates. It's a whole deeper problem, unlike anything I've ever seen in my 51 years, where you have a problem with the moral fabric of this country. And if you see an event where interest rates rise and the markets collapse, it will only get exponentially worse. You think a world where you can't go to a shopping store or to a mall or to go buy a nice gift for your wife on your anniversary or whatever it may be, we're rapidly approaching that. I mean, can you imagine owning a store in San Francisco where your mortgage is $10,000 a month and the cops aren't even arresting people as they run out of the store with all of your goods? They're doing this in marijuana dispensaries, where one of the guys comes out and says, I made more money and had less risk selling it on the streets than I do legally now, because they come in and ransack my store and the police won't do anything about it. It's the moral fabric of this country that is exacerbating the potential, the disastrous potential, if we see interest rates rise, because when interest rates rise, the three pillars of wealth collapse. Any angle you want to take, it's getting scary. And so I don't want to go too far down this rabbit hole, but what I want to say to people is that it's far more than what's happening to the dollar. We have a country that is becoming lawless. We have a country that is moving away from what it stood for. We are having a country that is forcing emergency workers, ambulances, nurses, doctors, firefighters to leave their jobs because of vaccine mandates. These are very, very bad times that will only be exacerbated by the turmoil that will happen as interest rates inevitably rise, but it will not come at the hands of Jerome Powell. Just like he told us that, and Janet Yellen told us that inflation was transitory, just like Bernanke told us that the subprime crisis was contained. They're always wrong. They're not right. They're not going to taper. And if they do tokenize a small taper, the market will puke and they'll go right back to what they were doing, probably with a vengeance. So I guess, why do you buy gold and silver? Because we are entering the final stages, I think, of a 100-year run in this country, nearly. And I think that it's going to start to get a little bit scary. It already is in the major cities. It's starting to spread out into the suburbs in some of these cities. And the last thing that can happen is to see interest rates rise and everything just collapse. So yeah, I don't think it will happen at all. And I think people need to buy precious metals right now as a shelter in one of the only asset classes that isn't at all-time highs, as a shelter for what inevitably is coming down the pike.
Yeah, and that's why this show's called Nation in Chaos, because of everything you just described. So where could people go to learn more about precious metals and just maybe buy them if they want from you?
We are building a new website. It'll be done shortly, but we are old school. And I've always felt that precious metals belong in a space that isn't digital. In an analog, in a digital world, I'd rather see people deal with metals in an analog capacity. Send us an email at info@milesfranklin. Mention the early stage investor in the subject line. We will guarantee the best prices, personal service. Our company's never had a customer complaint in 31 years. We're one of only 24 United States Mint authorized resellers in the world. And we're licensed and bonded by the state of Minnesota. As I mentioned, I moved in May to Florida, but I left my corporate office there because of the accreditation. The licensing and the bonding separates us from everyone else in the country. It's the only state in the country in a federally non-regulated industry that mandates it. So send us an email at info@milesfranklin. Mention the early stage investor. We'll send you a current price list. We'll answer your questions. And if you want to be contacted, one of our brokers or myself will reach out to you and answer all your questions personally in a way that is 100% non-pressure at all. And if we do a good job, hopefully we do some business together. But I can assure you it'll be a good experience. It'll be the best price. Treat them as family. We'll give them the best price. We'll answer their questions. And aside from our licensing and bonding, and we've never had a customer complaint, I can promise you your listeners won't be the first.
This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.